They have a lot of new members, but they also have a lot of products that they provide to their members, which gives SoFi the opportunity to cross-sell its products, which has many benefits. They can cross-sell products to existing customers, which means that they achieve additional revenue without spending a cent in additional costs. Think of this from a financial point of view in very simple terms. Revenue goes up, while costs come down. This is exactly what you want to see in any type of business. Lending and financial service products are all up, and the company has posted by far their best returns to date. And it's very likely that this is going to get more impressive each quarter, as the financial services productivity loop continues to create marketing efficiencies. We can see the huge growth in financial services and tech platform that now accounts for near 50% of revenue, up from only 20% in 2021, which further demonstrates SoFi's position as a top fintech company. On the financial side, things are just as impressive, with quarterly adjusted net revenue increasing each year and having just recorded by far their biggest quarterly increase. Look at the adjusted EBITDA, where there is an incredible improvement in the most recent earnings report. SoFi reported $186 million, a 27% EBIT margin. 2 years ago this was $44 million, and the quarter before that was only like $8 or $9 million. In the most recent quarter, we have $186 million. This is reflected in the annual 12-month full-year guidance and performance figures. There are huge increases in year-over-year net revenue growth and adjusted EBIT margin, which has seen SoFi turn into a profitable company for the first time, and now looks set to report a significant net income for the full year. Since the release of the last quarterly earnings report, SoFi has been skyrocketing, and it's worth keeping in mind that the next report will be for the full year 2024. Management now expects to deliver between $2.54 and $2.55 billion in adjusted net revenue, $640 to $645 million in adjusted EBITDA, and between $204 and $206 million in net income, with EPS between 11 and 12 cents, while tangible book value is to increase by over $1 billion year-over-year. Considering that SoFi had originally guided for an increase as little as $300 million in 2024. This has truly been an incredible breakthrough year for the company. SoFi continues adding customers at a rapid pace, which is driving revenue growth, and earnings projections look very positive. The valuation isn't as compelling as it once was, but that might not be a deal breaker for some investors. I have been bullish on SoFi since early last year, when the stock was only $7 at one point. It dropped to only $6, and I was more bullish than ever. At the time, every Wall Street analyst prediction that I had seen was saying that SoFi was going to drop lower. All the price targets were bad, but the company fundamentals told a different story. Looking at how the company had been expanding and improving on nearly every metric showed me that SoFi was seriously undervalued. Now we are into 2025 and SoFi is no longer priced at just $6. It is now $14. But has SoFi reached its fair value, or is the stock still undervalued? The very latest Wall Street downgrade set a new price target of only $8, which caused a 10% drop. But the stock clawed some of that back. KBW's prior analysis for 2024 was absurdly incorrect. SoFi has beaten analyst expectations for 14 consecutive quarters. There is no doubt that SoFi has taken shareholders on a roller coaster over the past 2 years. At its 52-week low back in August, shares were 75% below their all-time high. However, things have improved dramatically in recent months. The fintech stock has surged 150% since that low. Revenue in Q3 was up 30% year-over-year and 156% more than the same period 3 years ago. SoFi's customer base now totals 9.4 million customers, 35% higher than 12 months ago. Product innovation and cross-selling opportunities are key factors driving the company's expansion. SoFi has been able to attract customer deposits in remarkable fashion, currently holding $24.4 billion in deposits, significantly higher than the $7.3 billion at the end of 2022, which shows customer trust. SoFi reported for straight quarters of GAAP net income, and management predicts earnings per share will increase from an expected 11 cents for 2024 up to 68 cents by mid-2026. After that, EPS is expected to rise at a 20 to 25% yearly pace. At the 52-week low, SoFi shares traded at a price-to-sales ratio of 2.8. Now the ratio is about 7. The stock isn't as compelling as a buying opportunity as it was a few months ago. But if you have strong conviction that SoFi has a long runway to grow its revenue and customer base while increasing earnings, then perhaps you should consider buying it. SoFi's growth is showing no signs of slowing down. In December, it announced surpassing the 10 million customer milestone. This means new member growth figures were on track for its best quarter to date or very close to it, which also means a record growth of its lending and financial services products and therefore the best quarterly revenue to date. What do you think? Is SoFi still a solid investment now for 2025, with the stock at its highest price for 2 years? Or should we expect a pullback in January similar to the past 2 years? Let me know your thoughts in the comments. Always do your own due diligence. I am not a financial advisor, but if you enjoyed this analysis, please like and subscribe. Follow me on Twitter, and I'll catch you in the next video. SoFi stock has been on a huge run for the past 3 months. In fact, the stock has ran up over 150% since I made this video a few months ago, where I went through why this stock is such a huge opportunity and why I was loading up on SoFi stock. SoFi stock hit $17.20 in December, which is the highest price since 2021. But the important question now is, can that rally continue? And can SoFi become the millionaire maker that we all believe it can be? I also have one small warning for investors later in this video. If you follow the stock, then you know just how much SoFi is growing. But for most of 2024, SoFi stock had been dropping despite the company doing better than ever and making better profits than before. But in the past 3 months, the stock has exploded. So what is going on, and has SoFi finally turned the corner for good? Stick around to discover how you can make the most of this pivotal moment in SoFi's history. We've got a lot to get through in this video, so I will try to keep this intro short. But if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. Subscribe to the channel if you are new, and hit the bell notification so you don't miss out on any new content like this. I want to point out that I am not a financial advisor, and this is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early-stage professionals and offers variable and fixed-rate personal and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now I see so many people commenting on SoFi calling the company a startup. and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011. And a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It is still a growth company with huge potential and still at the very early stages. When you consider where digital banking is at the moment, but this is not a risky startup. That is only in its very beginning. This is well established, and Fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. Considering the promising Fintech industry's prospects together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. When we look at the latest investors' presentation, this presents a very different picture of the company than what Wall Street has tried to show us over the past 18 months. In fact, this is a company that is doing extremely well with regards to almost every sector of the business. New member additions have increased every single quarter since the company first went public, and so to have new product additions, which is increasing at a rate of 31% year over year, but also had its largest ever quarterly increase in the most recent quarter. If you consider the effect of year-over-year compound growth, you will see that in just the last quarter alone there is an increase of over 1 million, which is close to the entire full year 2020 growth rate. In real terms, the company is now growing per quarter what it used to grow in an entire year.